Time now for a look at the day's business news. And I'm joined in the studio by France 24's Cole Stangler. Hi, Cole.
Yeah, actually.
You're starting with General Electric. It's nearing a deal to sell its aircraft leasing business, which is one of the biggest in the world.
Yeah, this agreement first reported by the Wall Street Journal. GE reportedly planning to merge that part of its business with Ireland's AerCap Holdings. The deal could be worth more than $30 billion. It could be announced as early as today. As it stands, the firms are two of the biggest jet leasing companies in the world, renting out everything from passenger jets to cargo planes, working with the world's top carriers. With airlines battered by the crisis and spending less, a merger could help the new company better manage the downturn.
Meanwhile, Cole, a data release over the weekend by the Chinese government showed a record spike in exports.
Exports rose nearly 61% over the first 2 months of the year, well above expectations and highlighting the strength of China's economic recovery. Electronics and textiles were at the top of the list as global demand remains strong for work-from-home devices and for masks.
前2个月，我国对外贸易延续了去年下半年以来的持续向好态势，实现了开门红。这为全年开了一个好头，稳住了我国在全球供应链产业链中的中心地位，提升了我国在世界市场中的竞争力和占有率。
European indexes in positive territory to kick off the week as we get through those market figures here. Lifted by the U.S. Senate approving a $1.9 trillion stimulus plan over the weekend. Expected to get the final green light in the House this week. As you can see there, the CAC 40 and the FTSE both up around 0.6% gains too in Frankfurt. Oil prices, meanwhile, continuing to surge. Benchmark Brent crude now over $70 a barrel, its highest level more than a year. It's after a drone attack Sunday on Saudi oil facilities claimed by Houthi rebels. No impact on production, but clearly enough to unsettle markets. Oil prices had already been rising after OPEC and allies agreed to keep in place production cuts last week.
Well, Cole, wine producers here in France can breathe a little easier. Why is that?
It's because the US and EU have agreed to suspend billions of euros worth of tariffs on each other's goods. A 4-month truce in a battle triggered over state aid to Boeing and Airbus. While both sides hope to reach a more permanent deal, they've called their agreement, quote, a fresh start to trade relations. French wine producers certainly hope so. They'll no longer face a 25% levy on exports to the U.S. Solange Mougin reports.
A sigh of relief over a truce on tariffs. This French winemaker has had to pay heavy taxes on exports to the U.S., and those fees have now been dropped.
Un vrai soulagement. Vraiment, c'est une très bonne nouvelle pour la profession, je crois. On va pouvoir retrouver nos niveaux de vente de 2019.
Starting in October 2019, the Trump administration hit some European wineries with a 25% tariff on exports. The move was an escalation in a larger trade dispute over the aerospace sector, an Airbus-Boeing battle where winemakers were sort of collateral damage. With U.S. exports making up a fourth of her business, Florence Veillex had to cut over 10% of her profit margins.
On a rogné notre marge, de façon importante. Pour garder nos clients, on a vraiment fait des efforts commerciaux très importants.
The arrival of the Biden administration hit the pause button on the escalating trade dispute between Brussels and Washington, and a hope-for truce came swiftly.
On n'imaginait pas qu'il y ait une telle réactivité entre l'élection du nouveau président américain et puis la décision qui a été prise entre la présidente de la Commission et Joe Biden.
With no region spared, exports of French wines to the U.S. dropped 18% in 2020. So further east in Bourgogne, it was also a welcome change. Many a client had been lost in the past year and a half.
Sur le marché américain, en effet, maintenant, il va falloir que nos agents retroussent les manches et regagnent des parts de marché.
Winemakers are now hoping to boost exports while a definitive deal is being ironed out.
And finally, the recession sparked by the pandemic is disproportionately affecting women, especially in the United States. Research found over 2.5 million women left the labor force last year, compared to just 1.8 million men. France 24's Kate Moody spoke with Elise Gould of the Economic Policy Institute to shed more light on the issue.
This pandemic recession has done, it has revealed the cracks, magnified the cracks that we already had in the system before. We had already seen in the United States softening women's labor force participation over the last 20 years. We had seen many decades leading up to the year 2000 of increasing participation in the labor force. But over the last 20 years, that has softened somewhat in the United States. We're not seeing that in many of our peer countries, in Europe, in Canada, and elsewhere. And I think that is due to many of the policies that other countries have that the United States doesn't have. Paid sick leave, paid parental leave, paid medical and family leave for taking care of family members and children when you have a new child in the household. Also, we don't have the kind of safety net that's provided for childcare. And those kinds of things are keeping women from realizing their full potential in the formal labor market.
And you can catch that full interview on People and Profit on our website, France24.com.